maybe the upside potential does end up smoothing out over time. Is that the next cycle? I honestly do not think so. I think this next cycle is going to melt faces in a way that we have not deemed imaginable. It's very reasonable. If we see $1 trillion worth of Bitcoin come in, it doesn't mean that Bitcoin's market cap increases by $1 trillion. It means that $1 trillion of flows are going to be competing for what is, we know, a finite supply. And it's going to be very soon, if it was only 20, that's $20 trillion. There's your $1 million Bitcoin. And I think this is the life hack for millennials in particular, people who don't own assets yet, is to park your excess wealth in Bitcoin over a long period of time, and you come back and you reassess.
Daz Bea is the co-founder of Looking Glass Education, as well as a Bitcoin advisor. Daz discusses how Bitcoin can demonetize real estate, offering incredible opportunities and stability in today's economic climate. Daz shares how Bitcoin is a game changer for the younger generations, offering a way to acquire scarce assets in a world of rising prices. He explains how Australia's real estate market, driven by tax advantages and a lack of other robust options in the Australian equity markets, has priced out young people. This is not just happening in Australia, it's manifesting all across the world. Bitcoin, with its ability to be bought in small amounts and held long-term without leverage, provides a solution. Part of the problem with real estate is that it requires an over-leveraged position to enter the market, which enslaves a buyer into servicing a 30-year debt burden, and doesn't allow that same buyer to bring their wealth with them wherever they decide to go. Bitcoin fixes this and offers a solution to an otherwise jurisdictionally fixed asset class like real estate that is increasingly only available to the rich. But before we do that, I want to introduce our sponsors, Stampseed, the Orange Pill app, and Swan. Our partners are businesses and people that we respect and our products that we at Bit Intelligence personally use. You're watching 21 Voices.
We don't have a overly large stock market, so it's not a foundational asset and wealth creation tool like it has been perhaps in the US over the last few decades. So we're Australians, we're simple people, we're tradies, we're construction people. We don't understand necessarily what it takes to invest in stock markets, but what we do understand quite easily is real estate, right? So, and it's been reinforced by a, 40-year-long declining interest rate policy, which means over time, real estate price go up. So when you are investing for asset capital appreciation only, that's where the danger lies, right? It's and you can talk to, Robert Kiyosaki's of the world, who are famous for real estate investing, absolutely laughs at the notion around what we call negative gearing here in Australia. It's like been almost celebrated by the fact that you're reducing cash flow to offset tax, and people kind of look at that as a good thing, where, a nice, sound, safe investment strategy has been to increase cash flows, right? Increase purchasing power, increase cash flows, and that's where you build wealth over time. Whereas Australia's really celebrated this notion of negative gearing. So get over levered to real estate market in particular, use negative cash flows then to offset your normal taxable income. And that's been a very well celebrated thing in Australia. And that's reinforced the monetary premium on real estate. So when you know that your purchasing power through fiat currency and saving in a bank is slowly getting depleted over time through inflation, albeit insidious inflation over the last couple of decades, 2-3%, we don't notice it from day to day. So it's a slow bleed. And that's where real estate becomes like a pseudo savings vehicle. It's something that's easy to understand. If we, the notion is you park it here, you come back in 10 years time and your property price has doubled. That's typically been the attitude of Australians for the last couple of decades, and it's been a self-fulfilling prophecy. It sort of has occurred that way. But now what we're seeing is we're absolutely pricing out of the market anybody who works for wages. So the asset appreciation, people who have accumulated wealth over time have used real estate as the pseudo savings vehicle to protect that purchasing power, build up this portfolio for themselves, and they've basically priced out anybody who is trying to save to get into that asset. To keep this real estate Ponzi going, right, of making sure that you have forever going up real estate prices, because we are so over-levered to that system now, the incentives exist to keep it going. We put so much focus on Bitcoin taking away this monetary premium. So Bitcoiners are starting to wake up using Bitcoin as a unit of account. We're starting to reprice everything else in terms of Bitcoin. And when you do that for real estate, you quickly start to realize that, Bitcoin is the only mechanism by which house prices are actually getting cheaper over time. And I think this is the life hack for millennials in particular, people who don't own assets yet, is to park your excess wealth in Bitcoin over a long period of time, and you come back and you reassess. Because if you can hold Bitcoin for a long enough period of time, that $30 million house doesn't seem like $30 million in dollar terms anymore. When you think about it in Bitcoin terms, it's becoming cheaper and cheaper and cheaper over time. So that's when we talk about with Bitcoin, it's demonetizing other assets. Where we've traditionally used other assets because we understand them better, or we understand that they're going to protect our purchasing power over time, which has attracted this monetary premium. If you can have a money that's sole purpose is just money, that's where it's repricing everything. Well, there's an inherent amount of risk in real estate, right? I don't know too many people who've got $30 million sitting in the bank who can go and pay cash for these things. So to enter at a position, and we don't even have to be talking about the $30 million property, we can talk about the $2 million property, or even the $800,000 property. I don't know too many humble retail workers or wage earners who have that sort of money. And this is the problem, right? Trying to save that money over time. If your inflation rate is higher than your interest rate, you're going backwards. So that is running away from you greater than your ability to save in order to even be able to pay for the deposit, let alone the whole thing in its entirety. And I think this is where even when you get to that position, you've got to get into such an over-levered position compared to your wage. It's your serviceability of that debt. And when you have a centrally controlled monetary policy that ultimately dictates interest rates, there's an inherent amount of risk that people take for granted in and around just the fact that there's a couple of people who sit in a boardroom and control interest rates at the end of each month. Are they going up? Are they going down? And it's totally controlled. We have no ability to forecast which way they're going to go. And that over-levered nature of real estate in general is a great deal of risk in actually getting into a position where you are over-levered. Now, the difference with Bitcoin, and you don't have to take an over-levered position. You save, you minimize expenses, you put away what you're not spending, and you come back after 4 years. This is what we talk about often is the easiest way to get an exposure to Bitcoin is you buy it in small chunks, you buy it often to iron out the volatility, and you come back over a long period of time and you reassess what it's done for you. 4-year minimum, right? This is what we speak about all the time. It's like, get some exposure to what you're not going to need to pay for the kids' the kids' school lunches next week, and to fill up your car. You hustle, you try and earn in excess of what you spend, and you put that away for a rainy day. And you come back in 4 years and you reassess what it's done for you. It's an amazing thing to see what optionality Bitcoin is providing for everyday people. You're speaking to Sparkies, you're speaking to, I should translate, that's Australian for electrician, right? So you speak to electricians, you speak to tradespeople, tradesmen, you're speaking to people who work retail, and they're like, I'm now choosing to go traveling with my family. I've been here for 4 years, and this is the optionality that has provided my family. It's a beautiful thing to see people who are otherwise, foot on the throat, like really struggling to make ends meet. All of a sudden, starting to question the environment that we're operating in with a monetary system that we don't control, that is controlled for us and dictated to us, opting out of that system in a finite, scarce asset that's actually, at its fundamentals, really easy to understand. Like, us Bitcoiners, when you're here today, you've probably spent a good couple of hundred hours, at least into thousands of hours, to really understand this thing and understand where's this thing going to break. But once you understand that it's just tick-tock next block, and it's actually very easy to prove that nothing fundamental has changed in the base layer, it's actually one of the easiest investment assets to understand. And where it's really beautiful to see is like all these normal people, like everyday people, starting to wake up to the fact that there's something fundamentally broken in the system that we're operating in. I'm choosing to spend some time to learn about this thing, and it's now providing me options that I never thought even humanly possible, even in the realm of possibility for a humble wage earner. And that's really a beautiful, powerful thing.
Please bear with us for a quick message from our sponsors. These videos take a lot of time to make, and we've partnered with brands we trust like Stampseed and the Orange Pill app in order to get the funding we need to bring you these videos every week. Don't store your Bitcoin in cold storage without stamping your seed phrase on an indestructible titanium plate. Stampseed is fireproof, rust-proof, impact-proof, and easy to hide. It has no loose parts and will give you ultimate peace of mind that your Bitcoin is safe and sound for the long term. Click the link in the description below for 15% off your stamping kit. When I finally got Bitcoin, it hit me like a lightning bolt. It was the currency of the future, the only money that truly mattered. But there was a problem. I didn't know anyone else that thought like me. That is until I discovered the Orange Pill app. Suddenly, I was connected with a network of like-minded Bitcoin enthusiasts, right in my own city. The Orange Pill app is more than just a social network. It's a community of passionate individuals determined to change the world, one Satoshi at a time. This series is brought to you by Swan and created by Bit Intelligence. Remember to like this video and subscribe to both our channels for more videos like this every week. Thanks for watching.
The ETF launches legitimize it as an asset, as a palatable conversation to be had at the dinner table now, right? So people are starting to wake up to the fact that, hang on, if the largest capital allocator in the world is now offering this, maybe it's not so risque, maybe it's not so from left to field, and maybe it's okay to enter into a discussion. And I don't know about you personally, but I'm starting to now get the conversations coming out. But it's now starting to, again, come to the fore of people to go, I thought this thing died, right? I thought this FTX blow up and where this guy seized everyone's Bitcoin and was playing funny games and all this fraud, and then, number went down drastically. I thought it died then. Why did it not die? And why is it now at all-time highs? And it's never too late to Bitcoin. This is the really paradigm shifting thing about this asset, is that it is a fixed cap supply. Its number go up forever. It honestly will go up forever. Will it slow down in adoption eventually in terms of how much it appreciates in its purchasing power against other assets? Maybe. Maybe the upside potential does end up smoothing out over time. Is that the next cycle? I honestly do not think so. I think this next cycle is going to melt faces in a way that we have not deemed imaginable, because now the capital that's sitting on the side that is now palatable to take exposure to this thing is waiting on those sidelines to come in. And we've already seen a little taste of those inflows. But what's really important to highlight is that some of these capital allocators now are looking at Bitcoin as well, what we've been pounding the table on for the last cycle at least, if not the last two, is that the absolute wrong allocation to Bitcoin is zero. And what that means for people is going to be totally different. But even the capital allocators now are starting to think about, maybe we need 1 or 2% exposure to this thing to protect us against everything else that might go down in other traditional asset classes. And when you look at the normal 60-40 portfolio, the 40% of bonds is really at risk due to negative real rates. So that's a really important point to highlight, because we've got interest rates and we've got inflation rates. And while the interest rates still lag inflation, your purchasing power for bonds, if you're getting exposure to that, is negative yielding in real terms over the longer term. So all we need to see is a little shift in that mentality around maybe we should hedge against some of that risk with some Bitcoin. Prices met at the margin. So if we see lots of figures getting thrown around, like $900 trillion worth of assets under things. If a small percentage of that ends up flowing into Bitcoin as a hedge against everything else, the price is met at the margin. It's very reasonable. If we see $1 trillion worth of Bitcoin come in, it doesn't mean that Bitcoin's market cap increases by $1 trillion. It means that $1 trillion of flows are going to be competing for what is, we know, a finite supply. And it's going to be very soon, that price at the margin doesn't even need to be 100. If it was only 20, that's $20 trillion, right? That's a $20 trillion market cap. There's your $1 million Bitcoin. Very, very easy. Very, very easily to be achieved. And I think a lot of Bitcoiners even are a bit bearish in terms of what they think, what we believe is actually possible by just a small percentage of capital inflows on this. Otherwise, we spoke about that monetary premium. Just a little bit of that monetary premium needs to flow into Bitcoin for it to make drastic effects to price over the short term, let alone the long. All you have to do is look at some of the supply shocks in commodities markets over the last few decades to see what type of effect that has, right? And we're just about to see this confluence of all of these factors where now we have capital allocators wanting to get access to Bitcoin. We know with absolute certainty, the supply, and we can actually check the demand. We can actually see the flows in and out of exchanges. We can start to model what this looks like. So in really simple terms, if you have exposure to Bitcoin, all you really need to check is, did it break? If not, number go up. And it's as simple as it needs to be.
Daz emphasizes that despite numerous claims on its demise, Bitcoin has always recovered. He explains that it's never too late to start accumulating Bitcoin, as it's mathematically designed to rise in value forever. In the current economic climate, with rising inflation, impending interest rate drops, Bitcoin stands out as a logical long-term investment. Daz highlights that the exponential adoption and marginal price setting could lead to a supply shock, surpassing even the most optimistic expectations in price. Stay tuned and remember to subscribe for the latest recaps, insights, and films about all things Bitcoin. This is 21 Voices. If you want to watch another episode, try this one here.